Hey, this is Jared Harrison. Thank you for being with me. This is probably one of the most important videos. I know a lot of the videos I have talked earlier, I said were important, but this, beyond a shadow of a doubt, is probably the most important. What we're going to talk about today is what is the Mortgage Forgiveness Act of 2007. Well, back in 2007, George Bush, put together the Mortgage Forgiveness Act. And basically what it is, it entails that, let's say for example, and it's much better if I use examples, if you purchase your home, you lost $150,000, and as I mentioned in the previous video, a 1099 versus a deficiency judgment, the bank 1099s you. So now they've taxed you, or they're going to try to write off $150,000, and you are going to be taxed on that $150,000. Well, if you're like most people that have gone through foreclosure or have gone through a short sale or have a distressed situation in their life, most likely they're not going to be able to afford, whatever their tax bracket or pay taxes on $150,000. So what they did is they put together the Mortgage Forgiveness Act. And so what is the exclusion of the debt? So basically what happens now is that if this is your primary residence and you have lived there 2 out of the last 5 years, you have the right to write that $150,000 off on your tax return as an exclusion of debt. And what that basically means is you don't have to pay taxes on it. So does this apply to all debt? Well, no, this does not apply to all debt. This only applies to your primary residence that you've lived at the last 2 out of 5 years, that you can write this exclusion off. So if it's other debt like credit cards or car payment or investment property. Now, investment property, it does not fall under there, but there are other things that you can do if you do have an investment property. So let's look at the next question. Does this apply to a refinance? Well, let me put it to you this way. If you refinance your home and took out more money than your original loan, you could get taxed on the difference between the two mortgages. If you refied the home and it was less than your original loan amount, then it falls under this Mortgage Forgiveness Act. So again, I would probably tell you, look on the government site, usgov.com, IRS, I think it's irs.gov. It's in the actual form below me. I'm drawing a blank right now. But does it apply to refinance? Yes, as long as it's less than the original amount. Again, you'll want to consult with an attorney, you want to consult with a CPA and have them go over it. So how long is this Mortgage Forgiveness Act in place? So it started in 2007 and it went through the end of 2012. Well, at the end of last year, they extended it through 2013, which is December 31st, 2013. So what I think will happen at the end of this year is they'll extend it again. But we'll want to watch because this is very important and it's a very big deal. Can you imagine having to pay taxes on the losses of all these people that were underwater? Just a couple of years ago, over 48% of most homeowners were underwater. As of the last month that I can see through some statistics, is that only 32% of most homeowners are underwater because a lot of them have gotten out either through foreclosure, short sale loan modification, or because prices have come up in the last 6 months, they went from being underwater to back on the right side of things. So, now where can I get this format to be able to apply for the Mortgage Forgiveness Act? Well, if you go to the government, the IRS site, they will give you a form and an in-depth explanation, and most likely they're going to give you the most up-to-date explanation of that. You can also go on the IRS and get Form 982. That is actually an insolvent form. It says that your liabilities outweigh your assets. And if you can't afford it through the primary residence, and again, this is probably more towards the investment side of it, you just say that you're insolvent and that your liabilities outweigh your assets. So that's where the 982 form comes in. So what is the limit on this forgiveness of debt? Well, right now, if this is your primary residence and you're married and filing as a couple, it's up to $2 million. If you're filing individually, it's $1 million a piece. So when they did start this a while back, and originally they were only doing up to $250. As a married couple, $500. So This has changed a lot. If you own a luxury home or you're well upside down, this is a great time to take advantage of it, because I'm telling you what, coming up, this is going to expire at the end of 2013. It did expire in 2012. The government extended it, but sometimes you just never know what to expect with your government. So if you are upside down, you're concerned about what's going on, I urge you right now to go into this corner of the website, get my free report, How to Sell Your Home When You Own More Than What It's Worth. And now is the time to act, because you want to put this behind you, especially if some of these laws are potentially going to expire. So at the bottom here, does a second home apply? It doesn't. And you can look into that, because they have what they call Publication 4861. Again, get that on the IRS website, and it'll talk more in depth about a secondary home. Typically, most people don't have a secondary home. But again, go to the IRS website. It's below here. I'll link to it, and go to Publication 4861. Finally, how do I know if the bank decided to cancel my debt? So what you'll get is you'll get a 1099-C, and you will get that before February 2nd, the year coming up. So if you had a short sale this year and they're going to cancel your debt and they're going to 1099 you, you should get a 1099-C from the bank by February 2nd, 2014. So you'll know what they've done. You'll know if this has taken place. I would, around the beginning part of this year, call the bank. I know I get a lot of clients calling us, asking us what we should do. I tell them, look, unfortunately, as much as I would love to help you out, you're going to have to contact your bank. They're the one that's going to submit the 1099-C for you. And finally, the last question is, I've excluded on my tax return, do I show it on the 1099? So basically what that is if you use the Mortgage Forgiveness Act on your tax returns, and this is your primary residence, you've lived there 2 out of 5 years, you're going to write off the debt. If it doesn't fall under that category and you are most likely insolvent, meaning that your assets, your liabilities outweigh your assets, then you'll use Form 982. So, if this was a little bit drier and a little bit more in depth than you really wanted it to be, please just rewatch the video. You can also read the information below. In the corner, you can also get the most updated publication on the IRS website. Again, I would go to the IRS website, search for Mortgage Forgiveness Act 2007, and see what they have to say for the most up-to-date information. And again, I'm not an attorney. I'm not a CPA. Please, please, please consult one of the two of them at all costs before you decide to move forward with anything on a short sale, a foreclosure, or any of the above. Hopefully this is very helpful, give you an idea of what to expect when you are in foreclosure and the debt that you have that you want to take a loss on. So hopefully that answered your question. If you need a one-on-one free consultation and you want more of these questions asked in person and want a little bit more specialized to your circumstance, please, at the top of this website, look at our phone number, call in for a free consultation, and we'll be more than happy to sit down with you with one of our foreclosure specialists and have them go over this information again with you. So have a great day, and I'll see you on the other side.